Protecting your money offshore with the safest banks in the world is actually 10 times easier and faster than you think. But to get real protection, you need to stop making so many decisions about where to bank. So in this video, I'm going to show you a new way to protect your money offshore so you can completely avoid mismanaged banks, bail-ins, account freezes, and even government overreach. And you're going to like it because it's actually a lot less work for you. Now, to start, you need to understand just how big a shift this is in the offshore banking space, especially for high net worth individuals from places like Canada, the US, UK, Australia, and even the EU. So the old way is that they would decide which countries they liked, which banks they trusted, how much deposit insurance was available, how much they wanted to deposit, what kind of interest rates they could get on fixed deposits, how much you could keep in the account, how did they plan on using the account, where they'd send money to, where they'd receive money from, how much they wanted to invest, could they get a credit card or a debit card tied to the account. Basically, people just tried to line up everything, all the variables, as perfectly as they could to make sure that their money is with someone that they trusted more than their own mother. But what I've found after helping thousands of people successfully open accounts and protect their assets offshore is that this approach completely overwhelms them, and it results in them not taking any action at all, or worse, opening in the wrong country where they don't get the protection that they were looking for in the first place. So along with my team, I came up with a new approach that I'm going to share with you right now, and it simplifies the process and actually results in you getting the type of protection you're looking for. And it's all about choosing the right country. So it works like this. You choose the best countries that you can possibly access based on 6 criteria. First, do they give you full ownership over your assets? Second, do they have banking privacy baked into their legal system? Third, are they stable politically, economically, socially, and legally? Fourth, are they home to well-managed banks with professional bankers? Fifth, do they actively want foreign non-residents to bank in the country? And sixth, can you meet the deposit requirements? Now, we call this approach GPS, or the Guaranteed Protection Strategy, because if you follow it, you will locate the best countries that will actually offer the protection that you're looking for over your assets, in your name, rooted in privacy and professionalism. And it's really simple. But because so many people are ignoring these factors and instead focus on answering the wrong questions, they end up opening accounts in subpar countries with really low-quality banks. So to make this easier for you, we came up with 4 groups of countries based on the first 5 variables to help our clients easily decide where to protect their money offshore. The first group is where most of you probably live and bank right now. These are countries where you have big retail banks, lots of consumer lending, like mortgages, car loans, credit cards, and frankly, most of the banking here is geared towards local residents. This includes places like Canada, the UK, the US, and a lot of the EU, Australia, and other similar places. And we call these countries weak hubs. And generally speaking, when we're looking at weak banking hubs, you can expect no titled ownership. So the broker or bank you deal with is actually the legal title owner of your assets. You're just the beneficial owner. You get limited banking privacy laws, if any. They do tend to be relatively stable, but there's not much of a banking culture, and the vast majority of banks are not accepting non-residents. And this is a huge difference compared to the second group of countries, which is where most of you probably want to bank. Though you might also want to bank in the third group as well, which I'm going to share in a second. Now, retail banks still exist in this second group, but foreign non-residents can't use those retail banks. Instead, in this second group, they can open with private banks, premier banks, and certain offshore banks. Basically, if you're banking here, you're not opening accounts with banks that offer mortgages, car loans, or even unsecured credit cards. This group includes places like Switzerland, Liechtenstein, Luxembourg, and Monaco. And we call this group the super hubs. And no surprise here, these countries, they tick all the boxes. The legal title of your assets is held by you, by law, not the bank or broker. Banking privacy laws are literally hard-coded into the country's legal system. These countries are all extremely stable across all metrics and have strong banking culture and offer some of the best private banking services that you can find anywhere for foreign non-residents. And this third group isn't far off, because they also cater to foreign non-residents, but they're especially important when it comes to offshore structuring, fund management, and basically cross-border finance in general. This includes places like Singapore, Hong Kong, Jersey, Guernsey, and the Isle of Man, and we'll call this group the strong hubs. They're not super, but they're still very good. And for the most part, these countries tick all the boxes as well, with a few exceptions. See, while the super hubs give you full legal title through direct ownership, the strong hubs give you something similar with a bit of a twist. Banks here typically hold legal title, but only for custody purposes, either through a trust or statutory structure, which basically means your assets never become part of the bank's property and creditors can't touch them. Now, in terms of privacy, this is country dependent, but all of these countries do enforce very strong confidentiality laws, and these countries are all extremely stable. When it comes to banking culture, it does depend on the country that we're talking about. For example, the Channel Islands and Isle of Man, they have very strong banking culture with seasoned bankers who've been in the game for a long time. But places like Singapore, while still very professional, they have a younger industry that still has some maturing to do, especially in terms of how they handle clients and incentivize relationship managers. But all of these countries are very pro non-resident and offer solid banking options to anyone looking for diversification. Now, we still have one final group to get through, but to point out the obvious, the amount of money that you deposit will impact the quality of the banking hubs that you can access, which is why the sixth factor is deposit requirements. And I'm going to tell you exactly how much money you need to access each of these groups right after we talk about group number 4. And these are the worst options. These are places we wish people would stop asking us about. They're your non-CRS safe havens that other people tell you to bank in for privacy purposes, because they don't automatically exchange your information with your country of tax residence. But I've explained before why this doesn't really matter, because a lot of these countries still have direct country-to-country information sharing agreements in place, and if asked, they will all share your information directly with your country of residence and potentially even your country of citizenship. I'm talking about places like Paraguay, Dominica, Belize, Northern Cyprus. We'll call this group the murky hubs. So in these countries, you do not hold legal title of your assets. Basically, this is the same as the weak jurisdictions, where the bank or broker is the legal title holder of the assets that you custody with the bank. As for privacy, this is going to depend on the specific jurisdiction. In certain instances, there may be privacy laws in place. However, enforcement is a different question altogether, and whether or not bankers even care about the penalties that might be imposed on them if they break those privacy laws. Basically, it's not anything like you're going to get in Switzerland, Liechtenstein, Luxembourg, or Monaco. Now, no surprise, you're not going to find much here in terms of banking culture either. And that's because these jurisdictions are not home to large international private banks or wealth managers. Instead, you might find a couple representative offices who are basically there to help funnel money back to custody in Switzerland or Liechtenstein or any other jurisdiction. Stability is a bit of a mixed bag. You may find countries that are stable in terms of one of the aspects that we look at, but frankly, each of these countries has some element of stability that raises questions and concerns from a banking perspective and custodying your assets within their borders. But despite the other factors that we just covered, these countries do offer non-resident banking solutions, though we don't suggest that our clients ever make use of them. And in almost all cases, if you can qualify to open in these countries, you can qualify to bank in better countries instead. So if that's the case, why wouldn't you? Now, there is one acceptable explanation, and that's that you can't afford the deposit required to open in those other countries. But if you can't afford the deposit for weak hubs, strong hubs, or super hubs, you might want to wait instead of exposing yourself to banking in riskier jurisdictions like these murky hubs. Okay, so those are the 4 groups, and we've already talked through the first 5 criteria. Now, let's talk about money. Of course, there are more countries that fit into each of the categories than the ones that I've already mentioned, and each bank is going to have its own requirements, both in terms of onboarding and deposits. But I can still give you a range of deposits that you're going to need to make in order to access these countries or these groups. So let's go in order of the lowest deposits to the highest deposits, starting with murky hubs. Now here, you're not going to get a lot of benefits, not much security, and you're certainly not getting the kind of protection that you can access in super hubs or even strong hubs, which I'll share the deposit requirements for in a second. But given how much you need to deposit in order to bank in these murky hubs, you shouldn't be expecting much, because almost anyone can bank here with tiny deposits between $1,000 and $5,000, which is incredibly low in the context of offshore banking. Now, next up are the weak hubs. This is Canada, the UK, US, Australia, most of the EU. These are your retail banking hubs that have built their banking systems on the back of money printing and federal deposit schemes. We don't need to spend a lot of time here because most people want to get their money out of these countries, not into them. So I'll just say if you are a foreign non-resident and you want to bank in one of these countries, you'll need a really good reason to open an account, you'll need supporting documents, and you're going to need a deposit between $5,000 and $200,000 depending on the country and bank that you want to open with. Now, let's get to the interesting options. First up, the strong hubs. Here we're talking about Singapore, Hong Kong, Jersey, Guernsey, and the Isle of Man. And basically, this can include two types of banking: premier banking and private banking. Now, deposits do vary by region, jurisdiction, and the type of banking that you're interested in. For example, in the Isle of Man and Jersey, these will be on the lower end of the deposit range, while Singapore and Hong Kong are on the higher end. So you can expect anywhere from 25,000 up to 270,000, though there are options lower and higher than this, depending on the type of account that you open. Now let's talk about the super hubs. And remember, these countries get a perfect score when it comes to our GPS criteria. They're secure, stable, private, have a really strong banking culture, cater to non-residents, and they give you direct title ownership of your assets that you custody with banks in the country. Which is why, if anything happens to the bank that you choose in one of these countries, it doesn't matter, at least not in terms of the security of your assets. And to open in these countries, you're looking at deposits between 500,000 and 2 million as a starting point. Though if you're an American, you need to be coming in with at least 2 million, but 3 to 5 million is going to give you more options to choose from. Now, if you want us to tell you if you qualify to open in one of these countries, the super hubs or the strong hubs, you can fill out a free assessment using the link in the description or the pinned comment below, and our team will review your details and then get back to you with confirmation of where you can open accounts. But again, just to really hammer this point home, if you want your assets held with the safest banks in the world, you're better off choosing to bank in countries where the bank you open with doesn't really matter. Because at the end of the day, your assets are protected by the legal system of these countries instead of the individual bank or deposit scheme that doesn't even have the capacity to actually cover your assets in case of a widespread failure to begin with. Now, if you're like most of the people who we've helped successfully open accounts, you probably already have 2 or 3 countries that you're considering from a banking perspective. And I can almost guarantee that one of those countries is Switzerland. But opening in Switzerland is not very straightforward, and it's very bank dependent. So I made this video that walks you through the entire process and the common mistakes that we see people making when applying to Swiss banks. So if you want to protect your money in one of the strongest offshore banking jurisdictions available, give that video a click and I'll see you over there right now.